Aloha and welcome to Java. Thank you for joining me. This is Thursday, February 1st, first of the month, 2024. So we've got our MMRIs down 253.7 on the back of the Federal Reserve yesterday. Jay Powell basically saying that they're not looking at cuts in March, and the market dropped on that, realizing there's no way that they can do the 6 rate cuts that they were pricing in. So with that, stocks dropped back. Futures now are showing in the green, and the fear trade is kind of subsiding this morning. We've got oil up on news, and we've got the relative strength of the dollar and the 10-year yield high at the moment. I expect them to retrace. So with the lower risk, I do expect that probably stocks, the highest probability is that they will do a bit of recovery today. So with this lower risk, kind of a buy the dip mentality should work out, at least in the short term for today. So for a calendar, we've got huge earnings from Apple, Amazon, and Meta. So those are going to be the big things watching, and then employment numbers prior to market open for tomorrow. So this morning we did have an OPEC meeting, and they pledged to keep their production at the same level. So with that, oil is getting a little bit of a boost. Long term, that's inflationary, but we'll look at that in a bit. So with the banks, there's so much news today. We had Powell talking about their balance sheet now more over the rates. So that will be more of the mover between that and Janet Yellen. So as we were saying, OPEC are staying with their oil production cutbacks. More news, we've got the Bank of England, as I get this out, will probably post by then. I'm not expecting them to cut rates. They should keep those level for now, although between the Bank of England and the Eurozone, ECB, I expect them to be the first ones to cut prior to the Fed, because otherwise, what would happen in the currency markets, the US would decimate the euro. And they all kind of work in lockstep so that that does not happen by design. So with all of this turmoil going on and more issues in China that have been happening, so there's a flight to safety, and they're purchasing more gold than they have in quite some time. So we've also got in the Eurozone, basically they're talking about freezing the Russian assets, yielded over 4.4 billion 2023 in euro, and they want to send that to Ukraine. But if they do that, there will be repercussions. So moving on to the banks, is tremendous amount of news here. JP Morgan and Citigroup ramping up their investments in repackaged loans. So really what they're doing in the back end of this, they're taking apart these loan structures, and the ones that are rated better, more likely to repay, the better assets, they're taking those on, repackaging the garbage loans and reselling them to mid-sized banks or banks that they have already marked for basically being taken down either as mergers, sold off, or closures. And we've talked about this before. So Truist is cutting their networks. They're closing about 80 locations, and they're saying it's to reset their strategy and reduce expenses. So all of these job cuts for companies, whether it's banks or otherwise, are all talking about reducing their expenses, and when they do, it's positive for the company. So in January, lost thousands of jobs. We've got NASDAQ planning hundreds of job cuts. Now, NASDAQ, they are saying that it's basically, for the most part, replacing with software and artificial intelligence. That's an interesting angle with that. We have Deutsche Bank also cutting 3,500 jobs. They're boosting their dividend, and so their stock is going up because they've cut more jobs. So moving forward, these companies want to survive. There will be more unemployment. As I've said before, we need to hit, my estimation is somewhere between 23 and 29%. I know that's a large margin, but we're nowhere near that yet. And that's for the United States, and United States on the lower end. And then in the Eurozone, I'm expecting 25 to 28 before they start doing these cuts. So we've got lenders bailing out commercial real estate, and this is really the issue going on. So more of these banks are warning about this, and it's taken the headlines. This is directly from Bloomberg, and it's a global issue. So from New York to Tokyo, and the reason is they have all invested in these commercial real estate loans in the United States. So the risk is systemic. So what happened yesterday? We had New York Community Bank Corp. They took over this is an older headline. This is directly from the Federal Reserve. They assumed the deposits of SNB. So if you remember, they were the first one that had issues this past year, SVB. And now New York Community Bank Corp is taking the hit. So as we were just talking about, JP Morgan taking the best, repackage the loans, sell them to these smaller banks. So in 2008, they set up multiple banks just like this one in order to take the fall. They knew looking forward that these banks would not survive, so they have hand chosen their larger mega banks, and these other ones will take the fall. So their stocks plunged 40% after this, of course. So we got to move on because there's still quite a bit more. Jeffrey Gundlach still saying there is a recession ahead. I agree with him. He's a very smart guy. Everybody else is talking about how we've hit the bottom and going to grow from here. Well, yes, that's possible. But if we do, that means more inflation and less of a chance at the rate cuts. It means more pain in the economy because the realistic underlying economy is suffering. So we've got Walmart in a bright spot, or seemingly so, to open 150 stores in the United States. However, they're also cutting their models and automating more. So it actually means less jobs. So they're more on the value end of shopping. So we'll see how that works out. So this is also affecting real estate because not just with the loans, also with the rates, but now the pressures of property tax, which we were talking about before, add to the cost, as well as things like HOAs and insurance will also be the large one. Okay, so more news, the chip sector. So artificial intelligence companies lost 190 billion. There was a terrible report came out from Google and Microsoft regarding this, so they kind of dropped. But with that, we've got NVDA. They've got a new China-focused artificial chip set to be sold directly to Huawei, and they knew that this was going to be approved. So Congress, some of them making some very huge gains on trades they've made in this company. So this is another thing that I don't agree with. I want to see what you think of this, how you feel about this. 5 microchip stocks with all of these billions of dollars that have come in and they've lost. They're now getting subsidies. So Congress making trades, and they have voted in these billions of dollars in subsidies for these chip companies. Anyway, moving on, we've got Tesla. Their compensation package got voted down, so now he's looking at moving to Texas, kind of a Texas support. So how long can all of this go on? Well, we'll see. In Europe, we've still got the protests, and these protests are getting very serious. The farmers now have effectively locked off Paris. They've torn up roads. So they basically, between parking tractors, stopping traffic, and cutting up the roads, Paris is now cut off. They are in front of parliamentary buildings, and we'll see what happens with that. So there's just one update I wanted to give on this, and this is about Worldcoin. So back Sam Altman, who's now in charge of AI, ChatGPT, and basically kind of in league with Microsoft in particular. Now they're not, Microsoft was not allowed to purchase them. However, they do kind of control them. But their Hong Kong offices raided them, and they're looking into a breach of data privacy laws. So they were the ones that had the orb, and they were scanning, doing retinal scans. And they were saying that basically they were going to keep this all private. Well, now it's coming out, and we had talked about this before, that it would not stay private. So that's all I've got for you at the moment. It's going to be a very busy day. If you haven't yet, please hit the like button. Thank you for joining me. Until I see you again, my friends. Stay free.